Okay, guys, welcome. My name is Brian. Bleh. Yeah, Brian's good enough for today. This is just going to be a real quick freaking run through of consistency and money management. Let's see. Intro. Yeah, me, Brian McAfee. Been trading. This is pretty outdated because I think I'm almost October, 3.5, 4 years now. I do binary options and scalping in forex. For binary options, I prefer ranging markets and I do reversal pullbacks. Scalping, I'm more of an itchy trader. Not selling anything. This is just educational. Hopefully, to help some people not make stupid mistakes. We're going to be talking about consistency and money management, how they work together hand in hand. I've seen a few blogs about this, so I'm just basically going to approach it from a numbers point of view so you can see how important it is. I'm not going to get into psychology portion of it or any of that bullshit. I'm just going to stick strictly to the numbers. Uh, I originally, when I wrote this up, I put it help out new traders, but I mean, a lot of traders I see who are good. I've seen a lot of traders who do better than me and they're failing, and it's to the point is they cannot be consistent with their money management. Their trading's consistent, but their money management is not, and they're failing. I mean, I see some guys out there that are pushing 75% almost every day, and they're still failing. I mean, they're just doing shitty blowing accounts. So, it is very important. Without consistency and money management, you might as well not be trading. I don't care how good you are. You're not going to be successful. Okay, so consistency. Consistency, basically, all this means is that you can reproduce your results over and over. You may not be able to do it all the time, but in my opinion, your goal should be 65% of the time on a weekly basis. You can have losing days during the week, but you want to be at 65% for the most part over the week. And honestly, your dead flat cutoff line is 60%, but we're going to go over to the 60 to 65% why that's important on the next slide. Consistency bleeds over. Yeah, like I said, 60%. 65 is a good goal because it's going to make sure if y'all okay, so if anyone's watching this later to the point, I have people in the chat room making comments. So if I just hop off the subject, I am not crazy like Michael Freeman and have a dual personality. I'm answering some questions in the chat room. So don't think I'm out there. No, it's cool, lots. I mean, if someone asks a question, I want to answer it. Otherwise, I'll forget later. Okay, but consistency also bleeds over to your money management. If your trading is consistent, your money management needs to be consistent. It's a group package. Before you go live, you need to prove that you can have a decent money management skills and consistent. Without those two, I don't care what type of system you're using, then you're not going to be successful. And you, like I put on here, you might as well not be trading if you cannot keep your emotions under control and be consistent with good money management. Let me make that clear. You should not be trading. For new traders, we're going to focus on you first. And how you want to go about determining when you're ready to go live. So, how do you know when you want to go live? The majority of brokers require you to deposit funds to get a demo account on their platform. If you're good to practice and get into the feel of things from money management and marketing, you can always use Markets World. They have all you need is an email address to them. They don't call you up and bug you. And it's a zero deposit with just an email. You can also go over to the spot option website and get it if you're a spot trader, like not spot trader as in forex. If you prefer the spot option platform, they have a free demo there also. If you need more information on that, just hit me up through Skype, the forums, wherever, and I'll give you a link to either one of them. I'm not affiliated with them, and hell, the spot option one isn't even a broker. It's just you're testing out their platform like you were planning on opening a brokerage. But anyway, so you want to get a demo account. Once you get the demo account and you're ready to roll, the first thing you want to realize is just because it's a demo account and they gave you, say, $10,000, you don't want to go stupid with it. Base your demo account off of what you really have to deposit. We don't want you to go in and say, I have a $10,000 demo account, so I'm just going to say stupid, fuck it, and just trade dumb. If you have a $250 budget to deposit with, when you get your demo account, your money management is based off a $250 account. None of this, oh, I got a $10,000 account, let's go roll. Base your money management off. Now, the reason you want to do that is, for one, you're going to get the feeling of how your account's going to grow in real life, because a $250 account, and I'm not trying to discourage anyone from getting in, a $250 account isn't going to grow that damn fast. If you're using good money management, then your account's not going to grow that fast, but it's going to grow. One of the things I tell people is even with a $250 account, though, you're probably within 3 months using good money management, you're going to end up making more than you do at your job at wherever you're at, because you have the ability to build up your capital faster. And your trade size, at a certain point, you're just going to all of a sudden see your trade size start growing exponentially. For educational purposes for this, like I said, I'm not going to go into theoretics, freaking psychology or anything. We're going to stick with straight numbers. So for educational purposes, I'm going to say the broker has a $250 minimum deposit, and that's about the average we see is people dump $250 into an account. We're going to say they can do a $10 trade minimum, and so for the first month, you're going to be trading 4% of your account, which is good money management. 2 to 5%, never exceed 5%. I don't care if you are hitting 80%, 85%, and you think you are the shit. You never exceed 5%. Reason being is drawdown's going to hit you at some point. There's no ifs, ands, or buts about it. You are not going to escape drawdown. I don't care who you are and what you can claim your statistics are. Drawdown's going to hit you and kick you in the ass. And if you're trading at 10% or higher than 5%, your account, all that money you worked 6 months to build or 3 months to build, it's going to be gone in 2 days or 1 day if you're trading 10%. That's 10 trades, your account's gone. So stick to 5% or below. Don't ever exceed it. Okay, so I keep getting off on tangents, but okay, we're going to get more into actual money management next. For the purpose of this demo, we're going to be doing $10 trades until you double your account and you've reached a 65% ITM level. Like I said, the smaller trade amounts that I'm going to be showing with this have a good purpose, is that most people don't have a $10,000 account to start off with. And it's going to give you a feel for how your account is going to build. So when you do go live, you're not going to expect to get rich quick by that point. You should already be in the mindset and thought that I'm going to slowly build my account. If you think you're here to get rich quick, then you're thinking wrong. If you can put in 3 months of solid money management, by the end of the 3 months, I guarantee you, you'll be happy. Your account will be big enough where you could probably drop down to a part-time job. I mean, keep that in mind when you're trading. If you can become consistent and use good money management, 3 to 6 months down the line, you'll be making enough money that you're probably, I don't know what most people's jobs are, but the average amount of people I talk to in binary options, if you can follow strict money management off a 250 account for 3 to 6 months, you're probably going to be making more than you do at your job. And I'm not saying that to be rude or a dick, it's just a fact. Most people that are in this, they're in this because they're getting shit pay. Okay, so you want to start out, so again, back to this. The reason we're going to be doing it on these numbers is you want to start off right and get used to proper money management. Get a feel for how you'll be really trading and how the account will grow. I'll cover that in a bit, Jesse. Okay, I recommend doing this process. So what you want to do is you're going to deposit. You're going to have your demo account, which is going to have anywhere from $1,000 to $10,000 in it. If your deposit size is $250, I really recommend you building that $250 and doubling it 2 to 3 times. For one, is what this is going to do is prove that the strategy you're using is statistically sound, and 2, it's going to just basically force in over and over and over the thought that you need to use money management and you need to be consistent in your trading and your money management. If you cannot hit, and lots had mentioned it, but if you can't hit 65 ITM, a 65% ITM per week, I would highly recommend it's back to the drawing board. Pick a new strategy or work with your trading strategy you have until you can refine it to the point where you can have 65%. 60% is really your dead cutoff, and next I'm going to show you why your dead cutoff is 60%. 65% gives you a little bit of fudge room on not going into losing money. So your goal should be 65%. All my students, I teach them 65% is where you want to be before you go live. For one, it's going to save you some stress because you will have that drawdown, and drawdown's not going to put you negative right away. If you're at 60%, as soon as you hit drawdown, you're losing money, and a lot of people freak out and they can't handle that. Part of your demo period should be learning how to deal with losses. It's not real money, but at least you'll hopefully get a little bit of a feeling how real money works. Again, here's the 65%. I'm going to talk about it real quick. The 65% ITM percentage is important because depending on your broker and payouts, that is when you become profitable. Our imaginary account that we deposited has $250. For the first month, we'll be placing $10 trades on it only, and this is using a very simple money management. It's not what I use, but this is just, again, for numbers, and we can get into a little more advanced at the end. To keep this simple for the demo, I'm going to be saying you're going to be doing 100 trades in a month, and that your broker has a static payout of 70%. Okay, so real quick before we get past that, if your broker doesn't have a 70% or higher payout, I would consider going to a new broker, because it means if they don't have a 70% or higher payout, then you have to be higher than 60% to break even. Okay, so on the next couple screens, what I'm going to show you, we're going to be basing this on a $250 account. We're going to be looking for a 65% ITM. Our first month, we're going to be placing $10 trades against a $250 account, and each loss would be $10, and each win will be $7. So we're going to take a look at about how the account would grow. So in month one, if we're doing 65%, again, these numbers can be fudged a little bit, and this is based off of a $250 account. Month one, 65%, we had 65 wins, so that's $455 that we would have made. We would have had 35 losses, which is $350 we would have lost. Your net profit over trading for a month with 100 trades, you would have only made $105. Now, when I say only made, don't take that as in a bad way. You only made 105, but are you, like I put on here, are you rich? No. But did you lose anything? No, you didn't either. And it also gave you a feeling of how that account's going to grow in the future. So when you go live, what are you expecting the first month? $3,000? No. If you're using proper money management, you're looking at about $105 profit. Next month, we're going to roll that over. So our new balance would be $355. That would bump us up to, and we're going from now from a $10 trade, we're going to be bumping up to a $17 trade. That's a tiny bit below 5%. If your broker doesn't support down to the $17 mark, if it's 5, 10, 25, then you can round up and round down the numbers, but do not go above 5% again. So each trade is going to be $17. Each trade would profit $11.90, and each loss would be $17. So again, out of 100 trades, 65 of them won. That's $773 profit. 50 cents. Our losses $5.95. Our net profits $178. So again, did you make a lot of money? You barely hit the $200 mark on your second month. Don't expect rapid growth. That's one of the things. If you can get in the mindset that I'm not here for rapid growth, I'm here for slow growth, you'll do well. I mean, hell, if you can't hit 60%, then something's wrong. You're being greedy. You're not watching market conditions, or you're probably trading with some half cockeyed based strategy that you pulled out of nowhere. Like Glotz said, grind it out, and 6 months down the line you will be happy as hell, because grinding this out, these numbers start to grow. This was almost double. If we go 105, this was slightly less, and you doubled your money. So your profits almost doubled the second month. Let's look at the third month. The third month, your balance is $533. So in 2 months, you actually did double your money. You started out with $250, you're at $533. So you did double your money in 2 months. Where at your job, if you said, you know what, in 2 months I need twice the amount you're paying me now, they're going to tell you go fuck yourselves. Quite honestly, try and keep what you're doing in perspective with the amount of money you're using. You're not worried. Again, don't be worried about that rapid growth. Keep in mind what you're accomplishing. Even though it's on a small scale, keep in mind that you just accomplished, you doubled your money. And at any job in the world, if you said, I buy in 2 months from now, I want you to pay me double what I'm paying now, your boss is going to tell you to go screw yourself. So keep in mind that you may not be making a shit ton of money, but you did accomplish something that is impossible at your day-to-day job. You doubled your money. Month 3, your new balance is going to be $533.50. So that's going to bump you up to about $26 per trade. Again, that's a little bit below 5%. Each trade would profit $18.20. Month 1, we were profiting $7 a trade. Now you're up to making $18.20 a trade. Each loss, though, is going to be $26. So win 65 again. It's going to be $1,183. Losses is going to be $910, and your net profit's $273. So overall, are we still rolling in the money? No, but you're doing good. So at the end of 3 months, you'd be around $806. Your account would be at $806. So that is, let's see, 250 plus 250, that's 500, 750. So you've more than tripled the account in 3 months. I mean, you cannot, at a normal job, you're not going to beat that. Where I see everybody, not everybody fail, where I see the majority of people fail, and where people come to me for help sometimes, they can trade great. And again, I push this so much is because there are so many good traders out there who don't have to go to work anymore, but they do because they're stupid with money management and consistency. Um, I'll get more into that later because people martingale things like that. Next week I can cover that. But as you can see, even starting at 250, the account grows nicely each month. The chances of you blowing your account are diminished because you're not going stupid, 5% or lower. This was using simple money management. How I trade on a day-to-day basis, my trades get adjusted per trade. So basically, my amount of money that I trade per trade is adjusted up and down based off of a win-loss. I use a compounding method, but it is still within my money management. What I use is this spreadsheet, and I'm going to link it here for a minute so you can download it. I use this spreadsheet as my Bible. This is what 3 years ago, when I figured out that, hey, I was my own worst enemy, I had a solid trading. I was the idiot who I could trade good. I was 68 to 75% a month, and I was not making money. I was a complete and utter fucking failure, to put it bluntly. When I started using money management, that's when I started making money. So, I mean, I am a failure story and the only way I talked myself into it is I went back and looked at my trades and I was like, what the hell? My statistics are great. But as I was doing better, I was increasing my size way beyond 5%. So one trade when I thought I was on a run would knock me back 2 weeks. And that's what I see the majority of the time with people saying to me, I just can't make money. They can make money. They're way above 60%, but they're being greedy. They're not taking their time and they're not building their account. If I can do it, anyone can, because my worst issue I had with trading, this was forex and with binary options. My biggest issue was what I'm covering right now, money management. My consistency was there. I never had the money management portion of it down. So I did not make money. I was worthless as a trader. Had really bad habits.